Hey everyone, in this video, I'm going to do some basic financial statement analysis for NEO stock. I'm going to go over some basic information, try and make it accessible for non-professional investors. Those of you that are interested in NEO stock, but you may not be a financial professional. I want to make it accessible for you. Regardless, financial statements can be complex documents, so if anything I cover in this video is confusing, please ask about it in the comment section and I'll be happy to clarify. It's very likely that if you have that question, other viewers have that same question, so it'll be helpful for everyone who's watching this video. All right, without further ado, let's jump into this financial statement.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the financial statement I'll be looking at in this video is NEO's Form 6K, which was published in the month of December of 2023. All right, so the first thing I'll consider is its updated vehicle delivery numbers. So vehicle sales increased by 46% from the third quarter of 2022 and an increase of 140% from the second quarter of 2023. That was excellent growth for NEO considering that the EV market grew at a slower pace than that. So NEO gained market share in delivering in sales for its most recent quarter. That was driven by newer models, and we'll get a look into more of that a little bit later. So the increase in sales improved its vehicle margin, which was 11% in the third quarter of 2023. Still, it was below the 16.4% in the third quarter of 2022, but it was an improvement from 6.2% in the second quarter of 2023. So from the previous 3 months, NEO improved its profit margin. But when you compare this third quarter with last year's third quarter, NEO's profit margin decreased. Now, management did say that they expect their vehicle margin to grow to closer to 16% in the next quarter. So they are expected to improve in the next quarter again. Overall, gross profit margin was 8% in the third quarter of 2023 compared to 13.3% in the third quarter of 2022. Still, for NEO, generating a positive gross profit margin is solid. Many EV companies have a hard time generating a gross profit margin. That could partly be due to NEO's, up until this point, its outsourcing business model, which allows it to achieve gross profitability sooner than those companies that do not outsource gross profitability. That do not outsource manufacturing. So that could be one cause. Remember, Tesla is the leader in this category. Gross profit margin at its highest, Tesla approached 30%. That's been falling considerably, and given all the price cutting, that's going to keep falling. But at the height, Tesla achieved an impressive 30% gross profit margin. Now, NEO is flush with cash, $6.2 billion in cash and short-term investments. So it's got plenty of cash to invest in the company, especially if it's going to be hitting positive gross profit margins. That will help it achieve better scale and achieve better cash flow management as it grows to reach profitability, hopefully in the next few years. So here we can see vehicle sales from the third quarter 2023 to the third quarter 2022, and that rose by a nice margin, almost $6 billion, $5.5 billion increase in vehicle sales. Although that made its loss from operations worse, right? It improved sales by 5.4 billion, but it lost more money. Last year in the same quarter, it lost $3.87 billion. In the current year, it lost $4.8 billion. 4.8 billion RMB or yuan. These are in yuan, not US dollars. So even though it increased its sales, it lost more money. I don't like to see that typically. I want to see better evidence of economies in scale if I was a NEO stock investor. Although NEO does get a bit of a pass here because it's invested so much in its growth. It offered so many new models in 2023. That requires investment upfront to launch those new models, so that's understandable. Let's give NIO a couple of quarters to see if it can actually scale these costs and start improving profit margins. So one of the bigger recent developments is that on December 5th, the company entered into an agreement with JAC regarding the acquisition of certain manufacturing equipment and assets. So I mentioned earlier that NIO had been outsourcing manufacturing to JAC, and now it acquired it and it's bringing it in-house. So the company paid 3.16 billion RMB for this acquisition, and this can have major ramifications for NIO's profitability going forward. I usually say when you go from the outsourcing to insourcing, it increases the risk of the business. It also increases the upside of the business because of course, if you're taking more risk, it usually leads to better upside, but it also leads to greater downside possibility as well. It basically increases your range of outcomes now because these costs are now fixed. Whether NIO produces 5,000 units or 10,000 units, it's going to pay for these manufacturing assets. It's going to pay for operating these manufacturing facilities, whether or not it produces or if it produces 8,000 units or 10,000 units. But that being said, on the upside, its cost will stay more grounded when revenue increases. So it will lead to better profit margin expansion when sales increase. The thing I griped about earlier about NIO's sales increasing by 5.5 billion while its loss from operations increased could improve now that it is manufacturing itself. So this is a big change in business model. This is something I'm going to be paying very close attention to with NIO going forward. And I mentioned NIO launched several new models. On September 15th, NIO launched and started deliveries of the all-new EC6, a smart electric coupe SUV. In my opinion, NIO has nice looking cars, really nice looking cars. So I think it's an attractive option for consumers, but it's growing nicely. The key is for NIO to deliver these cars to customers and make them and have a difference between the price they pay and the price customers pay, enough to cover all of its business costs and deliver profitability on the bottom line. That's going to be the challenge for NIO. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.